Hey guys, welcome back to Results Junkies podcast. Paul is back in the U.S. right before I head out of the U.S., and we're going to be talking a bit about, wait for it, AI today, and some adoption of some standards that might actually help make it easier for developers to consolidate all the information that's streaming like a fire hose out at all the different companies here. Mr. Singh, welcome back to the U.S. How the heck are you?
I'm good. I'm good. I'm good.
That was a very that felt very loaded. So I'm gonna go ahead and
I was gonna
not
say,
ask for
yeah,
further information.
yeah. It's how it goes, right? It's as much as we try to talk about everything that's going on, some stuff the lawyers tell you to not talk about
Right.
on
I know. I love lawyers, except I hate them. So a little bit of housekeeping. A show at resultsjunkies.com is how you find us. He is at Paul Singh on all those social media channels. I am at Pizza in Motion. And while I do want to talk through this conversation about Anthropic and their MCP protocol, I just want to throw a question at you. And I framed this a little bit up in pre-show with you. We texted a little bit, but just for listeners and viewers, interesting thing with a portfolio company where early stage portfolio company, they're looking to bring in a very key hire. And, they've got, as you know, and for folks who are listening and maybe don't know, most companies have a defined ESOP pool or employee stock option pool. And, there's this, I wouldn't call it a tug of war, but there's this back and forth with your investors in future rounds to potentially replenish the ESOP for future key hires, or maybe to reward existing key hires to keep them from going out to the market. And so I've got a company that's sort of confronted with this choice of maybe they don't have quite enough to go around, if you will. And for a key hire, it's this, I guess the way I describe it is like, it's a little bit hard for founders to see around the corner and figure out how to, give equity grants further in the future. So I guess taking a step back, it's like, when you think about this, is it normal for a founder to give equity grants that might take a key hire 6 or 7 years? Is it normal that they'd be making those grants in the future and not being able to give a key employee certainty? Where's the market on these things today, and how does a founder resolve these issues of, this is how big it could get and this is how much you could make if you stick with us for the whole ride?
Yeah, I mean, well, okay. So there's a couple questions kind of all tacked together in there.
Just more than a
Um,
couple too.
yeah. So the thing that makes this tricky to answer crisply is that, as you know, it is typically stage dependent, and then it's also often it can also be role dependent as well. So in this particular case, when you mention early stage company, I think I'm going to just assume they're funded in some way as well. So there's
They
investors
are.
and
Yeah.
things like that.
Yep.
Most early stage companies that are doing convertible debt, I don't know, I won't probe and ask you too many questions. I don't want you
No,
to.
they're in a
But
priced round, so they've got, like
okay, so they've got a pool
they've
probably.
yeah, they have a pool,
Yeah,
right? And in theory, that pool, the pool's a limited size, and in theory, they would refill that pool when they raise again in the future.
yeah. Okay, so the first thing that's a bit alarming, and again, I'm saying this, I'm going to say this rhetorically because again, we
Yeah,
don't want to air anybody's dirty laundry. When typically when pools are set up, when I've seen them set up, particularly at the early stage, first price round, stuff like that, the pool is typically no less than 10% of
hmm
the equity, and typically no more than 20. Like the numbers that come to mind usually are just 10 or 15.
yeah,
So I will say, just as a potential red flag in my mind, and again, you don't need to respond to this or anything like that, but the red flag to me is how is it possible that they've run out of equity this quickly? Now, there could be a lot of reasons for that. Could
well,
be that they've got a lot of other people. Also,
yeah,
could be that
I
this.
think it's less of them running out. It's more of like thinking about how they're going to stage their ESOP if they were to commit a larger portion to one employee that could put them in the situation. So from a good governance standpoint, I think they're saying, well, hey, we haven't made all the key hires in this round, and so we want to make sure we've got some dry powder for a superstar that might drop in our lap.
Yeah. Well, okay. So first things first, let's make the assumption that this candidate is worth it and
Mm,
worth the
sure.
hassle, worth
Right.
the thing. Let's just make that assumption. If that's the case, the first step is that the pool has to get bigger, right? You can't give away anything that doesn't exist. So the pool does need to get bigger. Assuming that the investors and or the board are on board with that, it really shouldn't be a problem. It's just paperwork. Now, now let's assume you got a big enough pool.
Yeah.
Now the tricky part here is to really figure out what are we really worried about. Typically,
Right.
what you're worried about here is giving somebody so much equity and then eventually they leave. And and I guess just to fast forward this, I would say the typical structure for like an ESOP grant is something like a 4-year vesting period with a 1-year cliff, which basically means for anybody that's new around here, if you get some equity in that company and you leave, let's just say for any reason you leave by day 364, you have not completed a full year, you
Right.
don't leave with any of that equity. On the other hand, if you left, for example, exactly 1 year after you started, you would have hit the cliff. So 25%, because it vests over 4 years, so 25% would be.
Hmm.
And then I usually see at that point, once you hit the cliff, monthly vesting all the way up for the next 36 months. All right.
Right. Yeah. Me too.
In this case, let me just fast track to what I would do here, knowing what, I only know the limited picture here, right? So I'll just tell
Yeah.
you what I would do in this case. I think what I would do is I would probably keep the vesting period the same as everybody else, whatever it is, 4 years, 6 years, whatever they've decided on, just don't
Yeah.
innovate there. I think you got two options here, or a couple things that can happen in parallel that you should consider, or this company should consider, because this is such a large ask. Probably, you probably want the exercise period to be much smaller than whatever you have for everybody else. Meaning, hey, if this person leaves and they have vested some or all of this equity, maybe they don't get 10 years to exercise it. Maybe they exercise, or maybe they have 10 days or something like that. Now,
Right.
before anybody tries to like hit me up on social for being a greedy bastard, here's the thing. The key driver
That's my
here
job.
is that
That's my
this
job.
is, yeah, the key driver here is that seems like an increasing or extraordinarily large ask. And the worst thing that could happen is somebody, quote unquote, puts in the time and then just like leaves. And now you've given away, a big percentage of the company, and now that's not available for anybody else. So the goal here is not to be unfair, but rather to control what we're worried about, which is that issue. So what I would do is a couple modifications from whatever the standard lines would be. I would say that probably a shorter exercise period. I would say that the vesting would be annual as opposed to monthly after the cliff. So maybe it's 25% every year.
Hmm.
That at least controls some of the risk. And then the other thing I would consider, particularly with this role, I'm going to assume this person or role is somebody that could add serious value to the company. That otherwise,
Sure. Yeah.
I
Fair
got
to
to make
say.
that assumption, because why would
Yeah.
anybody even entertain this, right? So
Right.
they could
Right.
be a key engineer, key sales, key relationship, could be something. If that's the case, the third thing I would do here is I would actually split the equity grant. So it'd be still on the same sheet of paper,
Hmm.
but I'd say that half of the equity is time based.
Okay.
The
That
annual
4 year. Yeah. 1 year
quotes.
cliff. 3.
Yeah,
Yeah.
yeah.
Yeah. Yeah.
Well,
Yep.
the annual cliffs,
Hmm.
and then the other half should be performance based. And obviously, people are going to say, "Well, I don't know what I can achieve in that time." But hey, you had the guts to ask make the big ask.
Yeah.
Let's put some deal on the table or some
Yeah.
number on the table.
No, I like that. I
Um,
like that. It's a good suggestion. Yeah.
so
And I think what I'm also hearing you say, which I think is an elegant way to solve the issue, but you wouldn't stretch the vesting schedule past 4 years. So
I
I've
wouldn't.
seen some of it, mostly just because exits are taking longer. I've seen more. I guess more what I've seen is investors pushing founders to reset their vest to more of a 7 or an 8 year run if they're coming in. But to your point, I don't know that I've specifically seen any non C-level employees with 7 or 8 year vests.
Yeah, I mean, here's the thing. Like, again, I'm going to make the assumption that by early stage, you probably mean this is a company that has less than $1 million in revenue. They're probably very early. I'm not sure what we achieve with a longer vest that we're not already achieving with the earlier the shorter exercise period,
Right.
and maybe even the performance bonus, because we always call it the venture treadmill. The minute you put some money into this thing, you got to
Yeah.
go faster.
Right.
And so I would say that the longer vesting period is great. It'll probably make, if you did that, it doesn't hurt anything, but it certainly doesn't improve the outcome. You
Yeah.
need this person to be moving as fast as they can. And the best thing that could happen here is that this person executes and increases the value 10x more than the equity
Yeah.
that you gave away. And if that happens, that's great. And all I'm proposing with those three potential changes is to control the downside risk.
Right.
And that's, and for the record, by the way, just so people don't or know that I'm not like blowing smoke, I'm doing that actually with that, especially that third piece right now with my own equity around
Yeah.
here. I think that's worked out. That's really been interesting. It's been my first time trying it this way, and I can feel like a palpable difference in the way some of my key team members are thinking and acting. We're
Yeah.
definitely putting numbers on the board. So
Nice. Nice. All right. Well, I think that's a really good, succinct explanation of ways to potentially tackle this. I appreciate it, and I hope that's helpful to founders who are listening in and trying to think about ways to manage your equity. I think, my personal opinion is I always think of equity as, another tool in your war chest to grow a really big company. And I think you said something that really resonated with me is, making sure you're getting the value for that equity. If you give away equity in the company and you don't get value in return, typically what I see is founders who end up in this spot where they're underrepresented on the cap table when they get to a future round because they've had to give away more, or they gave away more equity than they should have. And so they have, instead of having 5% of a really, really big company, they have 5% or 10% of a smaller company that now needs to get recapitalized, and they're going to get wiped down into very low single digits. And the investors have to think about recap and stuff like that. So these are all like
if they get
important discussions.
recapped at all,
Right. So these are
yeah,
important discussions to have. You want to have long-term cap planning in place so that you don't end up in a spot where you're asking an investor to put money in and recapitalize you so that you have enough upside in the exit.
that's right. That's
All
right.
right, so let's pivot into AI. We'll include a link to this article in the show notes, but there've been a couple interesting developments, and I think mostly what we've seen so far is what I would call very robust competition between the different models, ChatGPT, Claude, Gemini, all this stuff, and I think what we're starting to see to a very small degree is maybe some agreement on some protocols that might help developers in the future, and so. This article talks about how Google is embracing Anthropic's MCP, Model Context Protocol. And why this is important is ChatGPT or OpenAI had already stated publicly that they plan to adopt MCP. And I guess like the short version here is this is a way for an AI model to plug into data sources, if you will. So if you're a really big company and you have a ton of data that you want Claude or ChatGPT to process, you have to have a way for these models to be able to pull that data in. And right now, to some degree, definitely not an area of expertise for me, but it seems like this is much more of a bespoke solution where a developer is building you a pipeline between you and whatever these whichever engine you choose. And MCP is sort of like a now becoming what looks to be something of an industry standard to say that, if you understand MCP and you're a company that has a volume of data that needs to be crunched, multiple different models give you the ability to port your information over. I have some thoughts on this, but I want to get yours before I give you mine.
Well, I'll start by saying that, as a reminder, I'm probably the least qualified to verify or validate or vet the MPC protocol. So just the fact that two big companies like Google and Anthropic are agreeing on it probably means it's good and it's powerful, right? I'm going to come at this from a slightly different way. One of the things we have not had a chance to connect on between both of our travels and work lately is that I continue to get more and more use out of my $20 a month ChatGPT account. Enough so, by the way, that now I've changed the bottom two buttons on my phone. The right one opens ChatGPT. The left one actually opens the audio, the what do you call it, like the voice communication with ChatGPT. And here's the thing: once I really got comfortable with the audio side, just like talking to the thing, I actually downloaded the desktop version of the app, and it's just listening over here, and I'm just talking out my ideas to it as I'm working. The utility increases quite a bit for me. And the other day I was just thinking like, man, this thing, like it's already, I understand why they're like, they limit it interacting directly with other apps right now, for safety and security and all that stuff. I get that, right? But it is incredible. I mean, I think the day that it gets access to my calendar and I can just say, hey, I'm running 10 minutes late for the next meeting, just let them know. That's gonna be a game changer. And to me, again, I don't know enough to validate the technical, underpinnings of MPC. But again, if it's two big companies agreeing, it must be something decent. But I come at it from the other way. If my assistant or my AI assistant could interface more easily with a broader range of software, yeah, that gets interesting really, really quickly. So, yeah, I mean, so again, I don't know if that's what you were looking to hear, but
Yeah.
yeah, I find myself at least once a day saying, holy shit, this is cool. If I was an exec admin right now, I'd probably be a little worried.
Yeah, I think when I think about MCP, I think, if you got Google, OpenAI, and Anthropic all saying that this is a good standard, I think the business side of this, like I think you touch on the I understand you're a businessman, but I think you talked more in what I would
Oh,
consider to be the consumer facing pieces of it. I know I don't say nice things to you very often,
I was waiting for
but
blood-sucking capitalist, but
I
okay.
know, I know. Well, that's your line. Don't forget full-time truck driver. So I think this concept of I still feel like you're using the tool in a consumer based fashion, and companies are talking about moving massive amounts of data and obviously using a massive amount of resources from these various platforms. And I think what's, maybe I'm wrong on this because if you're the least qualified to answer the question, then I'm second least qualified. The way I see it is if I'm Paul Singh and I'm running a large company and I've got relationship with ChatGPT to crunch all the data that Strata's got in their in their database and help me maximize that. And Anthropic or Gemini came along and said, "Hey, Paul, we use MCP as well. It's an easy switch. We can drop your price 20%, or we got this cool new feature, whatever it is." It reduces the friction to change. And I'd say, like, if you told me right now I just switched from an iPhone to an Android device, like, hard stop. I'm in the ecosystem because everything else is so hard to move over, pictures and contacts and all that stuff. And for very large companies, having a common protocol, in my opinion, would make it much easier to say, well, I want what that company over there is selling. They're doing cooler stuff. I'm going to go
I
connect
think the
with them.
switching cost is much higher than what you're suggesting there. Again, I'm probably just a mediocre, below average user, right? But here's the thing. If I were to, let's just say this existed, and let's say you gave me that opportunity, move to Gemini, you move to whatever. Okay, cool. NPC, great. That's awesome. But how in the world do I actually want to go
Right.
back to this new thing and say, hey, by the way, here's the org chart of my company. So when you hear me mention names, that's who I'm talking about. And by the way, here's all the names and date of births of my family. If you hear those names, you'll know who I'm talking about. Like, basically, the more you use these
Right.
tools, let me just say it a different way. The switching cost would be easy if you could not only move the underlying apps, which MPC would allow, but you would also have to be able to easily export all that stuff that you've got in there, all your custom prompts, all that context that gets created as you interact more and more. And that's where the lock-in is going to
Right. The
happen.
learnings. Yeah.
And so I think that's
Hmm.
why we're seeing, I know we don't have too much time today, but that's why we're seeing sort of a land grab strategy from Anthropic recently with them undercutting the price by half for their paid versions. I think as much as we hate to admit it, right? Could you actually switch from Apple to Android? Sure. I mean,
Yeah.
really, how hard is it? You sort of just connect to your email account, maybe move your icons around. But at the same time, that friction is enough where we're like, no, we're in the ecosystem, which by the way, you're not wrong. But the point is though, is that like
Right.
the friction doesn't, we're all lazy. As much as we may not admit it, we're all lazy. And then you add laziness on top of the potential fear of like, oh my gosh, what if I lose some of the context that I'd spent so much time, developing? It just gets harder and harder. I mean, I feel like you and I getting older now, we value every second we can get between our work and our families. It becomes less and less appealing to do anything that would require us to maybe spend an hour to set something up. Like that sounds
Right.
horrible to me. Spend an hour? Are you kidding me? So I think, yeah, ultimately, I think this MPC thing is interesting. And again, I'm underqualified to know if it's going to be the thing, but I as a user or again, mediocre user of this stuff, the utility of being able to interconnect with all the other things I'm doing, even if it's just my calendar, would be massive.
Yeah, and I think I would break. Right now I would break AI into three big buckets in terms of users. You've got the stuff that you're talking about as bucket number one. So it's personal interactions, calendars, contacts, things like that. Number two would be SMBs. So you and your team at Strata turning on the Google Gemini features and using things to increase the throughput of the existing staff. And then I would say large business, and large being maybe not quite all the way to Salesforce, if you will, but some of the stuff in between you and me in terms of our size businesses and Salesforce, and having massive databases of information that could be processed, or potentially like, well, let's use our friend Julian at PointsPath. He's got millions of data points on flights, all the searches that they've done on pricing and award price versus cash price, etc. Let's say we're 5 years from now, instead of millions of instances, he has billions of instances. Does this become a warehousing option where with those sorts of massive data sets, there's a different way you're using the engines? And so I think at opposite ends of the spectrum, we're seeing different things. Like for example, Anthropic has now rolled out their $200 version of ChatGPT for folks that need a bit more. And I think that's sort of testing this flex from, Paul and Ed as individual users into, Paul and Ed leading their team and 10 or 15 people using it. And then there's this third bucket of, I've got this massive amount of information and I've got a team of developers. And what am I having them do? Am I having them build plumbing into the next Gen AI tool I want to use? Or am I looking at, show me all the people that use MCP and knowing that I don't need to chew up developer time to switch? Is there a resource there I could use?
Well, it's interesting. I know we're short on time today, and but as you were saying that, it reminded me of a link I forgot to send you, but I'll send it to you in just a second. But earlier this week, the CEO and founder of Shopify sent out an internal memo that was eventually leaked, of course, as all things are. And so then he went on Twitter and just said, "Hey, it's already been leaked anyway, so I'll just post the whole thing." So he posted the internal memo that he sent out. And essentially in this email, and I'll send this link over to you in just a minute. It'll be in the show notes, guys. He basically goes on to say a couple things, but basically what he does is he lays out the strategy that they all need to embrace AI. And so I just sent it to you, and you haven't had time to review it or whatever, but I would just say there were two lines in this that really stood out to me. The first is he says, before asking for more headcount and resources, teams must demonstrate why they cannot get what they want done using AI. But maybe the
Right.
most eye-catching piece to me was at the end, the last paragraph, first sentence of the last paragraph. He says, our job is to figure out what entrepreneurship looks like in a world where AI is universally available.
Yeah.
I think that's really fascinating. And again, I know you haven't had a chance to read it, but to your point earlier, when you were talking about all the compute and all the different options available and all that stuff, the really exciting part here is like, I think I'm an early adopter when it comes to like phones and communication tools for my kids and cameras and stuff. But I've been a late adopter to things like this because I didn't quite see the utility. And maybe that utility wasn't there 2 years ago. But, looking at my own behavior over the last 2 weeks, maybe 3 weeks, I've found, I mean, I almost wonder why I'm paying only $20 for all the value I've gotten.
Yeah, no, I certainly understand that in terms of the value you can get from $20. I think, I just read through this real quickly while you and I were talking. I definitely agree that the two things that you said are two very key points in what he wrote. I think I'd reference one other line in here. Learning is self-directed, but share what you learn. If the guy running Spotify is saying we have a lot to learn about AI and how to use these tools, everybody's in that same boat. And I think that's where we stand today is, I'm forcing myself to use these tools because I want to understand how they can leverage, how I can leverage them with my teams. And I think there's just so much to,
Yeah.
to learn there.
Isn't it interesting how far we've come just from like, I feel we'd have to go back into the episode list and figure it out. But I remember the first time you even uttered the word AI was, I think you had mentioned Five Guys was testing like an inbound order taker or something like that.
Yeah. Yeah. And we still are.
And here I am talking about, ChatGPT essentially being my therapist, my email
I thought I was your
drafter,
therapist.
and everything in
I'm a little
between.
sad about that. Really thought I was your therapist.
Yeah. Yeah.
It's sad.
Well, All right, so you get to
If,
go on some fun travels now. That's pretty cool.
yeah. And thankfully I don't have meetings every night while I'm gone. I'll be in Taipei and Tokyo. We've got a few nights where I got to wake up in the middle of the night to have calls on U.S. schedule, but mostly gonna have a little fun with the family and definitely employing a strategy. I know we're not a travel podcast, but I would say I think we're doing something that I think most people would say is insane. I've never been to Taiwan before, and the award flights just happened to work out where we ended up that we were going to connect in Taiwan to get to Tokyo, just because Tokyo is
Yeah.
a really hard place to get to right now affordably. And it's like, well, I mean, instead of just connecting, let's spend a day there.
Yeah.
And people are like, well, why would you just spend one day in Taipei? And it's like, well, because then I'll have spent one day more than you have, and I'll see some things.
Yeah.
So I think people think about travel in this very linear way of I'm going to go to that place and do all the things that place has to offer.
Yeah.
And I don't disagree with that philosophy, but I think there are others. And I think, as I said on my travel podcast, Miles to Go, I view a one night layover in a place like Taipei as a feature, not a bug in the
Yeah,
fair.
I mean, I think that I agree. You remember there used to be that show, Anthony Bourdain, one of his latest shows before he passed was, I think it was called 24-Hour Layover.
It could be,
It
yeah.
was such an
Yeah, I don't
interesting
remember.
show
Yeah.
because it's
Mhm.
essentially what he would do. He would fly somewhere and
Yeah.
just go hard for 24 hours and then get back on the airplane.
Yeah.
So
Yeah.
I'm excited for you, man. I'm gonna live vicariously through you and your Instagram feed.
Nice.
So I expect to see probably at least 10% of your photos to be Disneyland in Tokyo, and then probably the other
Mhm.
90% food. Probably food, actually. Yeah.
Yeah, I'm a big soup dumpling guy, what they call Sholong Bao. And Din Tai Fung is my favorite place. I was ridiculed a little bit when we were in Tokyo last year for going to Din Tai Fung since they are Taiwan based, and why wasn't I enjoying Japanese culture? So we'll be hitting Din Tai Fung hard in Taipei, including the original first location of Din Tai
Okay,
Fung.
but the bigger question is, are there donut shops you will be
Oh,
stopping off
is that a question?
at? Okay, all right. I was gonna say, as you were saying that, I was like, is he just naming off Taiwanese restaurants because he doesn't want to admit there's no donuts? But maybe there are donuts there.
No, I'm trying to remember what it was. So it was, and I could be wrong about this, but I think I had a Chipotle donut in Japan when we were there, and it was not very desirable, but I took one for the team to try it. I'm looking to see if I can find it real quick while we're recording.
Like Chipotle
But it
with
was,
pepper?
yeah, no, it was a spicy, it was a very odd donut flavor. But they, it was, I mean, look, I'm here for all donuts, Paul, not just the best of the bunch.
You're an
I-
equal
I'm not-
opportunity donut consumer.
I am. I don't discriminate against donuts in any way, shape, or form. They're all my children, and I want to make sure they're all great in many different ways.
By
Yeah,
the
I
way,
wish I could
while
find.
you're pulling that up, I was thinking about you
Yeah,
the other day, which is a rare thing, and
it is. And you weren't screaming my name in effigy.
well, I did just a second later. But April Fool's jokes, I am waiting for the day that your April Fool's joke on your social media is that you've started like a super PAC to represent the spread of donuts or something like that, and that you're accepting donations or something like that, or that you've started a new airline and it's called Donut Air or something like that, and it only provides donuts, but 2 donuts in first class. Who knows?
Yeah.
So,
All
missed
right, so here they
opportunity,
are.
Ed.
Yes, it is a missed opportunity. I don't know. Well, maybe Jeremiah can fill the pictures in, but it was called I'm a Donut. That was the place I went to, and I am like 26% donut. But the 2 most interesting flavors that they had the standard. They had a glaze, they had a lemon, they had a custard, they had a chocolate, but they had a prosciutto donut and a chorizo donut. And I would say I would not have either of those donuts ever again in my life, but I've crossed off the chorizo donut and the prosciutto donut from the list.
I can't wait to see all this. I didn't have heartburn at 10 a.m., but now I do. Thank you.
Yes, you do.
All right, we'll see.